trillion sits in the top 13 companies in the world, and it's not productive capital. It's not going to people doing work. It's sitting in the bank account collecting interest and doing nothing. So that's kind of the situation we have. Now,
Yacht, the co-founder and chairman at Animoca Brands,
a Web3 leader active in the gaming, NFT, and venture capital space.
The problem we have in the world is to join the capital class is expensive because, and that's hard. But in Web3, even if you own a silly meme coin, whether it goes up or down, you are, however, now a member of the capital class. You have a capital asset.
NFTs are not going away, but most NFT collections are still performing very poorly. Why?
So I would disagree with that notion. NFT sales are anywhere from $1 billion to $1.5 billion a month right now. At the end of the day, when a non-Web3 person hears about NFTs, it's probably thinking about a Bored Ape.
What is Animoca and what's your mission?
Our mission is to deliver true digital property rights. If we succeed in doing so, we can reshape and save capitalism as it is right now. I think Web3 is the kind of engine that can provide a more equitable framework because everyone becomes a stakeholder. We believe that the way that we can solve many problems in the world is if everyone...
So you've been doing quite a lot of things successfully in the last 10, 20 years. What's something you believed a few years ago that has turned out to be completely wrong?
Gosh, so much. Where do I start? Maybe I'll start with...
That's very interesting because you're saying, essentially, crypto is great to help people, some people get out of poverty, right? And distribute wealth in a better fashion. Or is it true, or is it other people who understand the game who will make a lot of money and it's not going to change that much? For example, if you look at what's happening in traditional finance, you have people who invest, you have VCs, right? Invest in startups, then there's an IPO. And when there's an IPO, exit liquidity are the normal people, right? To be very honest, looking at what's happening in crypto, it's kind of the same, but with another set of people. You have the market makers, you have the VCs, you have the influencers, and then you have the retail people who get dumped on.
I actually completely disagree. But let me just explain first the macro. I think one of the things that we need to think about the world right now is the world is becoming more unequal. I think we know this, right? The Gini coefficients are getting worse and worse every day. The rich get richer, the poor get poorer, middle class is getting squeezed out. That's a macro situation. What that's also creating is a broader negative sentiment towards capitalism, particularly in the places like the West. Like the US has become more, particularly amongst youth, are actually favoring socialism. Karl Marx is a discussion topic at the top universities in sort of like, hey, it's trendy, because they haven't actually properly studied the history around it. But the point really is that the world is becoming more unequal. And so from an investing lens, when you think about sort of the inequality that you can probably project, especially with money printer go brrr, right? And especially when you think about things like, inflation rising and the fact that there's really only a small capital class in the world and still most of the world is still a labor economy, we can basically see where that inequality is coming from. So you either invest in real estate, luxury goods. The richest man in Europe is the Arnault family. Right? Just think about that, right? The fact that the richest person is not selling a valuable service to society. It's good for your self-image and your status, but it's not something that everyone needs per se. It's something that is really catered towards 1%. So you can basically either focus your attention on the 1%, which I would argue some aspects of crypto are doing as well. Which other industry can you invest in that actually can provide a broader good to the ecosystem and actually lift people out of poverty and is a proxy for how we sort of grow that space? And I think crypto is the only one. In the last 3 years, $21.7 billion of airdrop tokens were given to the community. This does not happen with VCs. This does not happen with IPOs, with companies. It was given to the community. And the narrative to think about that is, it's where a lot of the marketing and growth funding goes to. For instance, in gaming, we spend over $100 billion every year in advertising our games. It goes to Apple, Google, Facebook, all those guys. How much of that money goes to the gamer? Zero. How much of that money goes to the gaming studio that actually makes games? And does Apple or Facebook invest in games? Almost zero as well, right? So there's a huge extractive tax. And where does that money sit? $1 trillion sits in the top 13 companies in the world. $1 trillion, right? Now, that just gives you an example, again, of where that wealth concentration sits. And it's not productive capital. It's not going to people doing work. It's sitting in a bank account, mostly in Ireland, basically collecting interest and doing nothing, right? So that's kind of the situation we have. Now, while it is true that there is an advantage for people who have more capital knowledge than the ones that don't, the point, as I see it with Web3, is we need to bring more people to become capital owners. We need to increase the capital class. And that means we need to increase financial literacy. So we need to take a look at what Axie Infinity or Pixels or like Ronin is doing in the Philippines. All of them are portfolio companies of Animoca Brands. They've created financial literacy of millions of people who do not have a university education, who do not have even high school in many cases, but now through a crypto wallet have become financially included, to the point where in the Philippines you can't even win in a mayoral election unless you're pro-crypto. Because essentially people who do not have money now have a way where even though you're only making $5 or $10, that's a lot of money, they can now join the capital class. See, the problem we have in the world is to join the capital class is expensive, because capital means maybe you buy real estate, and that's hard because the cost of real estate is so much. But in Web3, even if you own a silly meme coin, whether it goes up or down, doesn't matter. You are, however, now a member of a capital class. You have a capital asset. It doesn't even matter if it goes up or down. It just matters the fact that you're actually become sort of financially included to a certain degree, because you can now do it for 10 cents, 1 cent, $1, whatever. And from there, you can start learning and gaining. And I think the amount of people that have sort of generated generational wealth, when you think of the NFT base, right, in 21, 22, and actually emerging now as well, the people who traded tokens, broadly speaking, yes, VCs make money. That's their job. But the common person has made more money in crypto over the last 3 years than in any other industry, I would add.
Every week, I sit down with the biggest builders, investors, and traders in the crypto industry for a 2-hour-long conversation on my podcast, When Shift Happens. Today, I'm announcing that I've teamed up with SwissBorg, the largest European exchange, to bring you the best alpha deals directly from the best builders and investors in the crypto space. We're doing this through an exclusive investment club called the Kevin SwissBorg Investment Club, which is accessible only via the SwissBorg app. What can you expect in the Kevin SwissBorg Investment Club? Exclusive access to only the best alpha from the best builders in the space before anyone else, and exclusive private deals that are filtered by the SwissBorg investment team and that are sourced directly from my behind-the-doors conversations with the crypto kings and queens. I have to say, this is not about random projects to buy or trade every day, but rather to focus on a few key projects, airdrops, and deals that can really move the needle and help you master the crypto game over the next 5 years, not 5 weeks. You can check the first link in the description down below. And now back to today's episode.
You mentioned the silly meme coins.
Yes.
Obviously, you talked about the gaming, because the main topic here is how do you increase financial literacy, which is a huge challenge, right? Because a lot of people don't really understand all this financial stuff. Even if you don't talk about crypto, right? They don't understand that, hey, you're working, you should save $500 a month, and just leaving it in your bank is not enough. You should invest it, and so on and so forth. They don't understand money printing, all that stuff, right? So what you're saying is the industry, basically the best way to increase financial literacy is not to go out there and educate people concretely on financial literacy, but create industries or sub-industries like gaming where they understand in another fashion by, for example, being drawn to play a game, right? That this is good for them and that they can make money about it, right?
So I think what we need to teach on financial literacy is the value of things and create an investing mindset. So first of all, I would argue that every person, every human has an investing mindset. It's just over time, because of schooling, because of culture, and to some degree society preferred to have a very large labor class because someone had to do the work in the past, right? Basically get to a point where you are sort of really working for someone, right? Because, at the end of the day, especially let's say 30, 40 years ago, if everyone was an entrepreneur and everyone was trying to build their own thing, well, then you wouldn't have a labor class. And if you don't have a labor class, then those companies can't exist and do stuff. But that's all changing because of AI and because of robotics and all that type of stuff, right? So I think there is a really strong argument to be made now, though, that humans have an investing mindset, and we just have to unlock both the creativity and the investing perspective that they already have. For instance, I don't think of investing purely in financial terms. I mean, that's one lens. I think of investing in everything we do in life, right? We take risk every day. I mean, even if you ask, a potential partner for a date, right, or a prospect, it may be romantic in nature. That's still a risk. The fear of rejection is a risk. The investment you make in that relationship is as risky and as dangerous as it is, maybe in some cases more dangerous than just putting out capital, because you can make more money, but maybe you can never get that relationship back, right? So I would say that as humans, we are already investing in nature, and we take risks for everything we do. We don't progress our human nature without actually taking risk on anything. I think this famous adage where, I think if you don't take risks, then you may as well not have lived, right? And I think if we take that lens on everything we do, the investing perspective is only one part. And I think we've, because of poverty, because of a form of oppression, poverty is a form of oppression, you start sort of really restricting your investing mindset because you think it's risky, but then ultimately you're actually restricting sort of, I guess, your life choices and, life happiness and stuff like that because you suddenly are afraid. I think fear is a big issue, right? And whereas I think crypto has given people a sense of opportunity, even if it's $1 or $2, it feels good that you put $5, which you can probably afford, and maybe you make $7 or $10. What it sparks isn't the money. It gives you hope. You say, oh, there could be something brighter. Oh, this is not just my lot in life. I mean, a lot of people just think that they're in misfortune because, they were undeserving. I mean, people sort of put themselves down, which is, again, I think a bullshit argument. But it's one that is, I think a lot of people narrative like to say, hey, I made money because I'm smart and you're dumb, which of course isn't true. I think most people have good fortune. And I think we need to appreciate, like for instance, people in crypto, like people who bought Bitcoin, great for them. And there's a certain level of risk they took. But the fact that Bitcoin is $65,000 has nothing to do with their intelligence and has a lot to do with the fact that they were fortunate. And that fortune, that appreciation that you were blessed with good luck is one element that I think you need to know that you need to give back, because fortune, I think, is something that cycles around.
How did you learn that? Because probably when you're younger, you start to do well, you probably need to get to some big failures. I mean, for me, that's what happened, right? You feel like you're so smart, and then you get put back on earth because you fail massively, and then you become more grateful, right? How did you learn that? Or were you born with wisdom?
No, I don't think I was born with wisdom. But so I grew up in Austria in the 70s. So I'm, probably much older than you. And what's happened was that, there were not a lot of Asian or Chinese people in Austria. So I was definitely a minority of minorities. And in that way, you basically get to be really looking at the world slightly differently. So I didn't have privilege. I didn't have money. And I got to see the world from a totally different lens, I think. Even though I speak fluent German, that's my mother tongue, I was always an outsider. So I kind of saw, from an Austrian perspective, the world sort of looking sort of inside out, right? So that was one perspective. And I think the humility came also from the fact that my parents were musicians. My mom really wanted me to study music. And, in classic Asian tiger parenting style, she made me study music. But I was in class with truly talented people, whereas I was basically more of an imposter, as in I practiced very hard, but I really didn't have the same talent. So that's really I guess, exercise in humility, because then you really understand, music, just like sports, you can tell the difference between true talent and, hard work. And the true talent that works really hard obviously excels. But if you're not born with it, like for instance, my mom was a great opera singer, but at the end, she didn't have the lungs to perform at the big stages. So she couldn't really become the opera singer she wanted. I'd studied piano, but my fingers weren't long enough to play all the pieces, for instance. So just because physically, I just didn't have long enough fingers to basically perform certain things. So these limitations make you also understand that there are things given to you in life that are not your choice, right? And we can't fault other people for them. And you make the best what you can of it. And when you have good fortune, the athlete that maybe has better stamina, the person that is taller so he can, I don't know, jump longer. The person with longer fingers so they can play certain piano pieces better. That's I guess a natural lottery, and it's good fortune for them to have it, and great for them. But it doesn't just happen because you were smart. It happened because you were fortunate. And I think people who appreciate that know that this is something that comes from good fortune and that it should be shared.
What was your good fortune? If you're not that much of a
musician? No.
Yeah. Musician, no, exactly. Like you're saying, basically, I'm realizing quickly who has a talent for what. When do you realize what your talent is?
So I think if I had to sort of point out I wouldn't say that I ever recognized what my talent is. I think it was more the fact that I always pursued something that I thought needed to have sort of impact and purpose for me. And I think the world influenced me in ways that, growing up in Austria was one thing, but my mom used to work at the Komische Oper, which is basically in the eastern side of Berlin at the time when there was still basically the wall. And we still had an iron curtain. And so I would cross over to the other side of the border to see my mom, every once in a while as a child. And I would see what true communism would look like. And that certainly had an impact for me in terms of, what I think wasn't good in the world. And then afterwards, because of Atari, basically I ended up working for them later on, through a series of circumstances. I went to the US. And in the US, it was all about capitalism. And I basically saw, the world of capitalism and the opportunities that it would generate, which I thought was very positive initially. And then, I came to Hong Kong to start ultimately I started one of Hong Kong's first ISPs. And over there, I basically experienced uber capitalism, like literally, like no social security net, nothing like that. It was basically literally sort of, you make money, you're fine. You have no money, you're literally screwed, right? Like that was the world of Hong Kong, in the early 90s. And I saw the problems related to that. And these all had an impact. So I would say maybe for me, it was sort of seeing the world at a young age, traveling around, experiencing things. And I think maybe having empathy, right? So being able to sort of see those perspectives and feel for those communities helped me sort of digest some of that over time. Again, I wouldn't know what I'm doing today based on experiences I had earlier, but they all ended up translating into it. And these experiences start to shape you. I think becoming a parent, for instance, and having children are also a really strong element in building empathy. So, which creates an understanding, because you basically have to understand, perspectives that are not your own, right? I have 3 really wonderful children. One of them is neurodivergent, really, really gifted, really smart, but completely different, right? And therefore had a lot of difficulties at school at a young age, for instance. And, the traditional parenting approach might be, well, what's wrong with you? Why can't you do the normal things, right? But then actually you realize that actually that's a gift and you have to look at the world slightly differently as a result. And I think I basically kept studying and researching it together with my wife to figure that out. I think but again, it comes from a place of humility, understanding that you don't know much about it and you have to study it first is actually, I think, really important.
Probably extremely helpful when you're in an industry like crypto, where you have these, we always, for every new cycle, we think this is going to be the big narrative. Gaming is going to be the big thing. This is going to be the big thing. But what happens eventually is that it's always the thing that we didn't expect that just comes in.
Yeah,
right?
Absolutely.
And so, previous cycle was DeFi, and then we had this NFT kind of craze. Obviously people were very deep into NFTs, might have thought, this is going to happen one day, but you don't know when, right? And now we have these silly meme coin, as you call them, right? And again, it's interesting.
But they're fun. Like, I'm not against meme coins, just to be clear.
What's your take on meme coin?
I think meme coins are a cultural phenomenon, and they are a representation of the zeitgeist of the era we live in right now. If the world wasn't as unequal, I think meme coins wouldn't have that meaning. Meme coins mean something to this younger generation of the world today. It's a little bit like fuck the establishment, but it's also a little bit like, the narrative of sort of their version of hope and opportunity is also their idea of equity. The most successful meme coins have a structure where they basically give tokens to everyone on day one, right? There's no investor tokens. It's fully community farmed. It's a completely different narrative. And then everyone basically is playing by certain open, transparent rules, which can be said is in some cases more fairer than maybe even the stock market, right? So there's narratives that they're building out. And, we saw inklings of that with things like GameStop, for instance, which was an early version of that. And I think this is just that on steroids.
Which leads to a logical question, which would be, Do you think meme coins are a flavor of the month, a flavor of the cycle, or do you think it's becoming a new category of assets within the digital assets
I think
industry?
they're absolutely going to be a new category of assets. I don't mean to say that the meme coins are going to be sort of, like every meme coin that's launching is going to be successful. No, I don't think so either. If you had asked my mom, she would have imagined that the richest person in Europe would be selling luxury goods and that we would be spending hundreds of thousands of dollars on luxury handbags, she would have said, I'm crazy. And here we are. 30, 40 years ago, hundreds, if not thousands of companies tried their luck at being the biggest fashion brands, which to me is another kind of meme, right? I mean, LVMH, Hermes, Rolex, Philippe Patek, it doesn't really matter which luxury brand you want to name. Those are the memes of their time. They represented certain aspects of culture and they were not that valuable. And now some of them are super valuable and many of them have gone away. We don't talk about the ones that have gone away. I think memes are the same. They're cultural artifacts of their time. They may not have the same value, and they may not have the same representation, but they are still cultural artifacts of that moment. And because it's blockchain, they will stay there forever. And whether they are worth a lot or worth little is just a reflection of the market and the adoption of the community. The community is the one that's going to give it its value. And, logically, GameStop should be zero at this point. It is not. There's diehard people who will never sell their share. And it has nothing to do with how much it's worth and everything to do with the person's social identity and the meaning to being connected to this community, which is, by the way, what NFTs represent as well.
We'll get onto that very shortly. The last question with memes is, Memecoin is, I've been following you for a couple of years, and 2-3 years ago, you were talking a lot about social tokens, right?
Mm-hmm.
Actually, the first time I listened to you was on an interview with Raoul Pal, and you were talking a lot about that, and he was also very interested into that. And I've been thinking in the last month or two, there is these meme coins launched with almost the name of people, right? I was actually wondering if this is not really a product market fit, but a sort of product market fit of what social token should have been or could have been. Or if it's something completely different.
Yeah, so let me first sort of talk about personality memes. I think personality or like celebrity meme names, again, I think is a reflection of the culture and the moment we're in right now. When you think about sort of 30, 40 years ago, whether it's business or famous people, they were not the biggest influencers in their era, right? They had influence, but you might know Microsoft and you wouldn't think of Bill Gates quite the same way. You would think of Apple, and actually for a long time, Apple wasn't Steve Jobs at all because he wasn't even at Apple, right? He had left, right? When you think about the brands of their time, whether it's Ford Motors or whether it's GE or whether it's even IBM. I mean, who even remembers who the CEO of IBM is, right? I mean, that's the moments of those times. However, today, all of our business leaders, not even in Web3, they're personality driven, right? It's Elon Musk is Tesla, and to some extent X, for instance, right? You think of you don't think of OpenAI as a company. You think of Sam Altman as a person, right?
It's just
and in
personal
Web3,
branding, yeah.
And so the meme coin culture that you see on the individual naming of people based on celebrity is simply a reflection of the fact that we've gone from essentially a corporate sort of, identity that's more associated with the collective of the corporate to the individual. And again, I say this is back to this inequality narrative, which is I think that the more unequal the society is, the more people are looking for heroes of some sort, right? They're looking for sort of icons to help them out of their circumstance, to make sense of the world. And I think fake news and all these type of things create these type of narratives. But again, they're a cultural sort of explanation of where we are today. And I think some people will keep them because it's, again, a moment in history of their time, right? Like, for instance, like one of the memes of the generation I grew up in, which is basically sort of, Rick Astley, right? Basically, right? His music basically is a total meme today. And nobody would have thought when the music came out back, basically, I think it was in the 90s, early 90s or late 80s, I don't even remember, right? Never Gonna Give You Up, right? That's like a total sort of meme today, but something that lasted forever. And I think similarly, we will see those artifacts of the time basically exist in that similar fashion.
So we have this kind of meme coin craze right now. We had something similar happening 3 years ago with NFTs, right?
Mm-hmm.
Obviously, NFTs are not going away. But we're clearly in a bull market, right? Today is a Bitcoin halving day. Bitcoin, near previous all-time high. But most NFT collections are still performing very poorly. Why?
So I would disagree with that notion. NFT sales are anywhere from $1 billion to $1.5 billion a month right now. So while it is not peak bull, it is roughly the same amount in terms of annualized value as it was bigger than 21 and roughly the same level of 22, right? And so when you think about 1 year ago, NFT sales was in the hundreds of millions of dollars. So it's increased. They don't have the same network effects because it's not as interoperable as fungible tokens. So they haven't caught up in quite the same way. But NFT sales are still very high. So for instance, when you look at Bored Apes, you might say, oh, Bored Apes 12 ETH, it's come down in ETH value. But in dollar value, when you think about the value, it hasn't actually changed that much. It stayed at $50,000. It's just that ETH was $1,000 or $1,500 or $1,300 a year ago, and therefore it was 20 ETH or 25 ETH floor as opposed to 12 ETH floor, but now at $3,000 each, right? So the point being that you have basically roughly similar values, but pegged closer to US dollar values than it is pegged to, say, ETH values. Also, NFTs has become more distributed. So in the let's say 21, 22, it was primarily an ETH narrative. Whereas today it's really divided between mostly ETH, quite a bit of Bitcoin with ordinals and inscription, and some Solana and other ones of them. So it's become a much more distributed ecosystem. And I think in time, when there's more ability to have interoperability, where these NFTs are able to sort of cross across basically layer 1, layer 2s, that layer volume and liquidity will increase in the same way that, because you have cross-bridging with fungible tokens, because these network effects can basically form in multiple L1, L2s, and you can form liquidity elsewhere and then just move them across, whether it's through using layer 0 or wormhole, whatever, you basically have more shared network effects. Right? So I see that happening. So I think NFTs are not, and then when you look at collections like Memecoins, a year ago, we launched Memecoins basically a year ago at, it started at $100 or less. And today its floor price is, roughly 4.4 ETH. So it's gone up. If you take a look at, for instance, Pudgy Penguins, right? That's another example of an NFT collection that, basically was down and went up. So I think you can't if you pick and choose one collection, you say, yeah, look at this, it's come down. Sure. But if you basically look at it as a collective, you have ones that have grown a lot and you have ones that have come down a lot. And that, to me, is just a reflection of a natural capital market, particularly a capitalist market. But isn't a reflection of NFTs itself. I think NFTs is rising. It's actually one of the biggest narratives that has brought on people during the bear market, because they didn't join basically, at least in Asia, because of fungible tokens or meme coins, because those don't exist, or even Bitcoin, right? Remember in 2017, 2018, still most people joined crypto because they want to have Bitcoin. Actually, in the last few years, most people joined the Web3 world because they wanted to play blockchain games or be in NFTs and so on. Like if you look at, for instance, what happened in the Philippines, right, with Pixels and Axie Infinity on Ronin, you actually can see that, again, it's a gaming NFT narrative. It's not a token narrative. So I think it onboards a different sort of set of people. But I think both NFTs and regular tokens, both of them still represent the same thing, which is they are representations of the network effects of their communities. One of them is a little bit more focused because they're essentially more concentrated like NFTs, whereas fungible tokens are more broad, but they both are still representations of the network effects. And if the network effects of the token ecosystems grow and accelerate, then the value itself will also represent that. And I think it's the same with NFTs as it is for fungible tokens.
As you probably know, we are teaming up with Astar Network on this show. Astar Network is a decentralized blockchain platform that aims to bring billions of people into Web3. And the Astar team has a very specific strategy to make this happen, to partner with the biggest conglomerates in Web2 and help them onboard their customers into our world, the Web3 world. If you want to check out for yourself, I invite you to watch the Candid podcast I recorded with Sota Watanabe, the founder of Startail Labs and Astar Network. And now on to today's episode.
You tweeted a few days ago, just added 10 amazing Bored Apes, which in my opinion are still as one of the most important NFTs of Web3. Why do you believe Bored Apes are still here?
So first, it was quite undervalued, I thought. But also, for me, and this goes back to my earlier point about sort of, good fortune and sharing your good fortune. I think all of us in the NFT industry owe the Bored Apes an incredible amount, because the Bored Apes were the narrative. At the end of the day, when a non-Web3 person hears about NFTs, it's probably thinking about a Bored Ape.
That's true.
Right. And so that narrative brought out. The celebrities bought Bored Apes. We wouldn't be here, I think, in the way that we are if it wasn't for Bored Apes. And I know there's people out there saying, some people like to hate them and, people are maybe envious of their success and so on. But at the end of the day, I believe very much in giving back. That's also why we invest as much in, we're probably the most prolific investor in Web3. And we don't think of investing simply from the lens of how much profit we make from it. We also think that as we keep investing in our ecosystem, we're actually generating goodwill and more value because we've had the good fortune. How do we share in that good fortune? So me buying 10 Bored Apes, basically, at really low floor prices. And now I think the floor price is, up almost 2 ETH since the purchase, which is nice. But also I tried to create a message to say we all owe a debt to the Bored Ape community for getting us there. And I think other people started to sort of feel the same way and actually evoke that feeling and that memory and that empathy to say, actually, that's true. For as much as we want to say that maybe you guys had some missteps, which they certainly have had, everyone has had them, we still owe them a whole deal. There's this thing about giving back. I mean, if we do a thought experiment, Apple is sitting on over $163 billion of cash, give or take, and it's mostly sitting in Ireland, probably collecting interest. Imagine if they took 10% of that cash and made a VC fund. It would be the biggest VC fund ever. And maybe they only invest in the App Store ecosystem. If you make an app on the App Store, we might be your investor, which is kind of what Animoca is doing, right? If you build in Web3, we'll invest in you, or at least take a look at you. And they might give seed funding, and they might give Series A funding. First of all, it would completely accelerate, the App Store ecosystem and reinvigorate, essentially, the SME base of the App Store ecosystem, right? No game company that is small, an indie game developer, can make money on the App Store today. Only the big guys can. So that's one issue. Two, I think everyone will be very happy to pay 30%. Because again, there's value coming back in the ecosystem. And finally, I actually think Apple would generate much more value from the equity that is generated from the investments. Like if they invested in these companies rather than the shares, right? So my point is that actually giving back to the ecosystem is always better than just simply extracting. And I think that this is the Web3 nature. Like in Web3, all the exchanges, all the larger companies, not just us, we all invest. Coinbase has a VC fund, OKX has a VC fund, Binance has a VC fund, right? We have a fund, right? We're all investing in the ecosystem. In Web2, how much is Facebook or Apple or Google or those guys investing? Scarcely nothing. And then we ask ourselves the question, why is the world so unequal? And I think a lot of this in the past came through taxes. And I think what we need to do is encourage people to invest back, because if they're not going to pay taxes, then at least they have to give something back to society. And I think investing is the better outcome for everyone involved.
Absolutely. And you see a lot of people who are doing individually well in crypto and then become sort of angel investors.
Absolutely. And I think that's a great example of how value shifts and value is shared.
What do you think Bored Ape should be to be valued correctly?
Well, first of all, not financial advice, but generally speaking, I think of Bored Apes as the Warhols of our generation, right? So they'll go through swings, but if we believe, which certainly we do, that billions of people are going to be in Web3, they're going to want to own the artifacts of their time, and to me, CryptoPunks, Bored Apes, those are great examples, right? If someone's going to say, I owned a piece of Web3 history, there's not that many that you can think of owning. And Bored Apes is definitely up there. There's many others as well, but I would say that they have that reflection. So I think, to me, over time, they'll be priceless. I don't know. I think, it's, again, like I personally think, for instance, that Bitcoin will be worth $1 million+, not because it's a store of value, but because, again, if billions of people own crypto, then the people who own Bitcoin are not going to do it because they want to trade it or because they treat it as a currency. It's because it's going to be the ultimate status symbol to say, I have one Bitcoin, because there's only 21 million of them, right? So it's that kind of thing we think Bored Apes will represent as well.
There's another project you mentioned before, Pudgy Penguins. What do you think about what Luca Netz is building with Pudgy Penguins?
I think it's amazing. I think, I think they understand narrative construction very, very well. They understand building. And I think what Luca and the Pudgy team is doing is pushing essentially, Web2 people narratives into Web3 from a different perspective, from the retail perspective in part. I think they're great storytellers. And I think that's what the ecosystem needs. Approaching it in a different way, the look and feel of Pudgy is specifically something that will really works for their narrative, right? Because everyone owns different type of narratives. It's not a narrative that Bored Apes can do, for instance, because Bored Apes is a little bit more edgy and a little bit more sort of risque in structure versus Pudgy, which is really cute and broadly accessible, for instance, right? So I think it's important what they're doing, and I think it's fantastic to see all the progress.
Obviously, you mentioned Animoca before, so we have to talk a bit about Animoca.
Sure.
What is Animoca, and what's your mission?
Our mission is to deliver true digital property rights, and we think if we succeed in doing so, we can ultimately reshape and save capitalism as it is right now. I think Web3 is the kind of engine that can provide a more equitable framework because everyone becomes a stakeholder. So we believe that the way that we can solve many problems in the world is if everyone becomes a capitalist, as in becomes an equity holder of some form, right? Because imagine if your 401k or whatever pension fund wasn't cash, which was you're sort of diluted out of, but rather it was receiving a fractional share in your real estate that you're living in, or in the city or country that you're in. We would have a completely different circumstance for every citizen that's out there, as an example. Instead, we give the cash to really bad money managers who can just sit there on a very lazy basis, earn interest. I think it's a crime, right? Because people are putting their hard-earned money for their future pension. That future pension will not pay their life going forward. So that means they can't stop working as they hoped for because they don't own equity. Versus if they had owned even a slice of real estate, they would have done a lot better, right? So I think that's one of those things. And I think with Web3, we can finally provide a framework where you can actually have mass distributed ownership. So the promise of digital ownership isn't just, yes, I can own my virtual sword and I can own my virtual land and have a Bored Ape and digital sort of status symbols. Yes, that's obviously one angle. But it's the fact that you can scale that to 1 billion people, right? There's probably almost no method in which 1 billion people can become sort of asset owners in the physical sense. Think of the paperwork, the administration. Government systems wouldn't be able to manage that, right?
I was trying today for this podcast, actually, one of the sponsors is paying in shares, right?
There you go.
Fuck me, just to get access to these shares, the amount of paperwork they're asking, I'm almost abandoning. I'm I need 2 proof of address, I don't have them.
Yes.
So I send the email, I don't have them. Oh, therefore we cannot do anything.
Yes.
It's ridiculous.
Yeah, no, absolutely. And I think, and again, these were systems designed for a different era, right? So we're a public company. Animoca is a public company. We have over 450 investments in the space. We have 2,800 shareholders. And so we have only common shares, which means we kind of run like a DAO indirectly because big decisions we have to go through sort of public shareholder votes.
Animoca has 2,800 shareholders.
Yes, today. And you can buy our shares through OTC. We're not listed, but because it's common shares, it's your property, so we can't stop you from trading and selling. We respect that. So, but imagine as we grow, we would have maybe 10,000 shareholders, 100,000 shareholders, 1 million shareholders. We can't manage 1 million shareholders. We still have to print a prospectus that we have to send to our shareholders about major decisions. We can't print 1 million prospectuses. That doesn't work, which is, by the way, true for a lot of companies around the world. But with tokens, right? If you think about token holders, you can have 1 million people own Ethereum, own Solana, own Sand, own Ape. And you can actually do, with ApeCoin, the DAO, a lot of people like to dunk on it, but it's still a $1.5 billion DAO or $2 billion DAO, depending which day you look at it, that's run fully decentralized, that has the ability to have hundreds of thousands of token holders that can basically decide on sort of, the future of the ecosystem through a common vote that basically you can't do in real time in the physical world, but you can do in the digital world, right? So again, how do you manage, to your point, an organization that might have 1 million shareholders or even 10 million shareholders? You can't, except through Web3. And that's why I think, digital ownership, the future of that is so powerful, because that actually is a realistic framework where every citizen, for instance, in your country could become a stakeholder in one form or another and basically partake in sort of the growth of a capital asset. The future of work is going to be such that, we don't need drivers. We don't need people working in factories, right? Robotics and AI and machines are going to be taking over most of the job. So what do people do? They have to be sort of creating and inventing and basically doing the kind of things that people are good at, which is not going to be common labor, right? And that means they need to own the intellectual property. And again, how do you scale to protect your intellectual property? Again, I think only Web3 and blockchain today can do that at scale.
I have another question regarding kind of NFTs and coins, right?
Sure.
I read the tweet by this guy, Seed Phrase, was saying that the kind of next big wave in NFTs is going to be from NFT project launching coins, right? Which makes a lot of sense. If you think, at least if you think short term, you would think, how do I attract people's attention? If I'm a project, I'm going to do an airdrop, right? Use my protocol,
Sure.
I'll airdrop. If I'm a NFT project, because let's say I have 10,000 NFTs, it makes the incentive of launching a token even, like it gives you even more incentive, right? Because it's fixed supply.
Sure.
And then if every project does that, could be like a big wave, right? The first question is actually from a friend of mine who just sat with me the other day and he was like, I understand a crypto project launching a token. Fine. It's like, you have stocks if you're a normal company. I understand a project launching NFTs. But why would an NFT project launch a token? What's the logic behind it? Except to get more money, right? And I asked the question to Sebastian yesterday, actually, and he had a great answer, but I wanted to hear from you, what's the logic of an NFT project launching their own coin?
Right. So, I mean, the first counter sort of question I would say, what's the logic for them not to do it, right? Like in the classic sense, because meaning that in Web3, you can compose and be creative in any level or degree. Like who decided that what you can and cannot do, right? So, I mean, that's the same thing I think is the argument of meme coins. Those people who, and again, I'm not a big trader in meme coins. I mean, I own some, but I really don't, I'm not a day trader, like whatever. I've just have fun with it. But the point to me is that, the same people who might say, well, why do you need a meme coin? Like, it seems like a waste of time. Well, the point is that it's someone's free will to decide to make a meme coin. And if a community adopts it, then it has existence because it has a shared reality, right? I mean, humans live on stories, right? I mean, money is a story, right? Who decided that, we end up basically sort of trading notes for value for actual tangible goods, right? We can't eat a banknote, right? But yet here we are willing to exchange it because we shared a common story. So to me, basically, whether it's an NFT and the pursuing and ensuing tokens thereafter, it's about expanding network effects, right? So when you think about network effects, everything is around sort of creating more community. So when you have an NFT collection, you might have thousands of NFT holders. And then basically when you drop a token, you actually can expand the community, but you benefit basically the ones who were loyal to that. And to me, that's no different than the airdrop campaigns that we think of in terms of the expanding of the ecosystem, because you have to advertise your ecosystem. So you got to pay someone to do it. In this case, may as well pay the end users who have become your champions. The NFT holders who basically get the benefit from this, they're the ones who are basically promoting you. They become your champions. They become your marketing agent, and you don't have to hire them because effectively you've paid them to do the job, you could say, in many cases. So I think of this as an expansion of network effects, right? In Web3, I said this earlier, tokens are network effects, right? So they basically represent the value of these network effects. What often happens, and I think people sometimes confuse this, is getting money. Well, if you give a free airdrop to communities, like I think I shared earlier, like over $21.7 billion was basically given as airdrop tokens to the communities in the last 3 years, right? That actually is money to the community. That is not enriching the business itself. And in many cases, people would drop the majority of the value to its community first before, and they give liquidity to the community first. Like for the ApeCoin, for instance, when that was dropped, right? VCs and investors, actually there were no investors, but basically, launch partners and so on, basically had all of their tokens locked. It was the community that had the ability to sell first. And that model has been basically sort of adopted by almost every project thereafter, right? So again, value was given to the community first, and they created the network effects for that ecosystem itself. So, and also, by the way, I feel that there is no limit in the number of tokens we could launch, because I think of tokens as representations of the specific network effects. And because it's Web3, the liquidity is shared across. So for instance, if one project does really well and brings more people in, it ends up moving other people into other ecosystems. The fact that meme coins, whether they are silly ones like Bonk or like, Shib or Doge or like whatever name you want to put out there, if they bring in new members into the ecosystem, they will translate themselves into other ecosystems because they're in Web3. In Web2, you can't do that.
Makes me think about two questions. The first one is, therefore, you believe that seed phrase is right. Most of the NFT project at some point will probably launch a token.
It's to expand your network effects, right? I mean, I think you have to, unless you're more than happy to have a limited network, which is okay too. I mean, it depends what you're looking to do. Like not every project wants to be McDonald's, right? Some projects would like to stay a Michelin star restaurant, and that's okay too. And they serve a certain audience and generate value that way. So it really depends on your goal and your mission, I think. I think one of the things that, tokens represent, some people talk about tokens as currency, and I think that is fair in the sense that currency is a social network. Like money, I would argue, is perhaps the biggest social network in the world, not in the sense like a Facebook, but in the sense that it has created a system in which we create this credit-debit relationship, a social relationship between strangers, where I can now transact, not knowing who you are, anywhere around the world for some value, because we agree that this US dollar has some kind of value perspective, which creates sort of the social environment. And I think basically when you think about tokens, you need essentially the fungible aspect as well, because the non-fungible is scarce, right? If I give you a non-fungible aspect, there might be traits and features that I treasure, and I don't want to give up my membership, but I want to be able to sort of share my distribution and share my, call it, social connection in a manner that comes from my network without having to sort of give away my NFT. And I think fungible tokens do this quite well because they are fungible by design in the sense that they're meant to be something that aren't as personal as an NFT.
I'd like to take a short moment to introduce our partner, Mentor, who helps us make this show possible. Mentor was created to hyperscale the Ethereum network with what we call a layer 2 that helps users like you and me transact much faster and at a fraction of the cost of the Ethereum network. Mentor has over $2 billion in total value locked. We actually had Ignace Ternus and Jordi Alexander on this podcast, who both are key figures in the Mentor ecosystem. So I invite you to watch these two very candid and in-depth conversations to develop your own opinion. Thank you so much for your help. And now on to today's episode.
You mentioned that you own a few meme coins. Can you share maybe two of them? And the question is not to say, oh, Yacht owns this meme coin. No, it's really to understand what's your framework on when something gets interesting enough to basically acquire it. It's more that, right? Like this one, there's nothing behind it. I mean, there is a kind of culture, but the reason why it's interesting to me is that, right? So we understand. And for me, it's more, I'm thinking about the classic TradFi person who moves into crypto and is like, what is this shit? I don't understand. Like, it makes no sense, right? So maybe if you can share maybe just one example or two and say,
I can give a few
the
examples.
reason is that.
But let me just highlight, I do not think of meme coins as an investment, right? So my involvement is either fun, curiosity, or support, right? Meaning that I think that what they're doing is important. I don't think of it necessarily as making money, but I think it's valuable for the ecosystem. So I'll give you two examples. So Doge to me is a cultural icon. So I have Doge, not because I think it's worth a lot necessarily, but because I think it's just fun, it's interesting, but it's also more importantly, something that's part of the culture. Like I think, owning a little bit of Doge is a little bit like having a laugh and sort of having fun. And there's a good reminder that, we shouldn't take ourselves too seriously, right? So that's one example. But then, for instance, Memecoin, which is basically meme land, right? It's a Hong Kong-based project. And, we're a Hong Kong-based company. And so I don't remember how many, whether I own 50 captains or whatever, or maybe it's 20, I don't know. Like I own a lot of NFTs from that project. And as a consequence, I also own a whole bunch of tokens from them. And to me, it had everything to do with the fact that they're a Hong Kong-based project with a great Hong Kong founder that I wanted to personally back and support, right? And so the signaling was on my public wallet, so they could see that I was out there publicly supporting them. That was another thing as well. And so you'll see, for instance, us or me particularly do this as well. For instance, I'm not an investor in World of Women, but I bought a whole bunch of NFTs in Women's Day because I wanted to support the movement and I wanted to sort of create a narrative and a messaging around that as well, as an example, right? And I think all of us in the ecosystem who believe in Web3 sort of share that ethos.
So you've been doing quite a lot of things successfully in the last 10, 20 years.
You only hear about the things that work, though.
So basically, I wanted to ask, what's something you believed a few years ago that has turned out to be completely wrong?
Gosh, so much. Where do I start? Well, I mean, maybe I'll start with something that was a bit more spectacular. This was, I think, 2006. So we really invested a lot in AR. Right? And this was way before...
In 2006?
2006,
In
yes.
AR?
Yes.
Already?
Yeah, we did AR in 2006, 2007. And I think we kept fighting until 2011, 12, when we just said, you know what, this is just too tough, right? And this was before Pokemon Go and so on, right? And even then, post-Pokemon Go, I think AR hasn't reached its promise. And back then, by the way, we didn't even have mobile phones, right? I mean, there was smartphones. It was literally, basically the camera on a desktop, not desktop, on a laptop, or basically cameras on a desktop. And we basically thought that people would interact, by reading picture books and, it's sort of literally a quasi-phygital experience where you could experience your virtual and your physical because of, back then it was a form of a QR code or a symbol to do that. And I think the vision was the same idea in terms of, well, we think the physical and the virtual are going to completely mesh. And what I think at the time, maybe we lacked the imagination to think that actually the virtual reality is going to be infinitely more powerful than any construct that basically binds it to the physical. The physical is important because it maybe gives you a sense of touch and feel, but the virtual is boundless, right? So the things that we can imagine in our mind or the things that we can dream of have no limit, whereas the physical ones have limits. And I think one of the challenges we see in AR right now is that, we're reflecting our virtual aspects in the physical world, when in fact, when we close our eyes, we can imagine most of this quite well already. And so I think AR itself, while it's a powerful tool, I think is an add-on to our life experiences. It is not a transformative part to our life experiences in its current transformation, which is also, by the way, why we think VR is a nice add-on to the metaverse, but we don't think it's going to be sort of the metaverse itself, which is what a lot of people sometimes think when they think of metaverse. They think of, VR goggles or spatial computing. Again, they're enhancements, but what makes sort of our virtual experiences so powerful, we think, is what we feel for them, which comes from the ownership aspect and from what it means to us as a story and as a person, not from the fact that I can see it a certain way. I often give this example of, it's similar to why NFTs have certain kind of emotional values, like a wedding ring, for instance, right? If you have a wedding ring, it's not valuable in terms of dollar sense, but it is immeasurable and invaluable from the relationship you have with your partner. If you sell it, well, that's probably bad news to your relationship. More importantly, though, there's a story that's embedded that is entirely emotional. That ring, when you look at it, will look the same to every other person in the world, and yet when you see it and when you experience it, you feel a whole set of emotions and feelings that no visual experience can replace because it's entirely in your mind and in your heart, right? So I think the same is true for our virtual experiences. We make friends online. We make partnerships virtually with people we've never met before. They don't look anything like that in real life. They might be, they might be a bear, they might be a dog, and yet here we are. We create strong bonds because we tell these amazing stories as humans in our mind.
Do you have an example in crypto of what you believed that proved out to be completely wrong?
Well, I think, one of the things that perhaps we believed in the early days, I think there's two things worth mentioning here. The first one that I think we believed was that gaming utility alone was going to be, digital ownership was going to be sort of, and by the way, that is the number one use case why people want to play blockchain games. But that it was going to be enough to carry essentially Web3 adoption for gaming. But it needed DeFi summer to happen, right? Because the liquidity in DeFi actually created the engine of growth and the validation that ownership had meaning, because that actually allowed for things like play to earn to come and emerge, and basically the trading and the volume and all of the additional sort of financial constructs. Whereas you can see, for instance, certain other NFT collections that did not partake in sort of DeFi adoption, say like NBA Top Shot and what happened with Flow. And they actually suffered because they didn't actually move quickly enough in sort of taking advantage of the liquidity that DeFi would offer. So that's kind of it was something that we switched very quickly on, right? But it was just, an assumption we had, in 2018 and 2019 narratively, because we didn't really, we didn't come from a financial lens at the time. And so we didn't focus enough on the financial strength of Web3. Like today, we totally believe that, you must have strong financial rails in Web3 gaming and Web3 anything. Otherwise, it's not really Web3. The other thing, I think, which has really changed in our belief is when we think about Web2 to Web3 adoption. I think, like many others, they believe that, giving people wallets and making them move from giving them basically access to digital assets will help onboard at scale. I think that turned out to be completely wrong. Meaning that a Web2 user moving onto Web3 can only happen when they become more financially literate, when they have an understanding why these assets mean something. Right? So when people talk about Web 2.5, I get a little cynical. Not because I don't think the intention is nice. It's the fact that, well, are you actually really making them a Web3 user, or are you hoping that they stay a Web2 user and you just build Web3 backend? I think that doesn't work. Because even though a person might not understand anything he's doing and just interact with the Web3 backend, he won't understand the reason why he has ownership. He won't understand that there is a perspective of sort of financial literacy needed to advance himself. So I think Web3 games today must focus on adding financial literacy into the program, into the tutorials, rather than just simply, here's your wallet, good luck, and let's go, because they wouldn't know what to do, for instance, right? And I think that was a big learning. And so we're focusing more on Web3 nativity rather than basically just pure Web2 adoption from people who don't know anything. I mean, Web2 users are basically a labor class, right? And you need the investing class, which is the Web3 user.
Absolutely. What's something that is non-consensus today, but that you believe in, that you think in hindsight, in 3 to 5 years, will be very obvious to everyone?
Education. I think education in everything, and especially in Web3, is going to be one of the most important things, not just from a, let's call it, societal adoption standpoint, but also from a use case perspective. Because what is the one thing that we do, even in games as humans every day? We learn. We never stop learning, right? You go to TikTok, you go to YouTube, you go to every social network. You're not going there just to meet friends. You're actually learning something. In fact, learning is the key engine of our human development. And education is actually a $5 trillion space. Today, it's much bigger than gaming, which is like $200-300 billion, which is impressive, by the way, but it's not nearly as big as education. So moving basically the financial rails of education, creating more value for our teachers in the ecosystem, I think also creates more value to society. Teachers are underpaid, but actually in Web3, just like what you saw with NFT artists or with gaming, you can actually create more value for those ecosystems, and more value can go directly to the teachers rather than these sort of extractive intermediaries. And so we started doing this with Open Campus, TinyTap, and with the EDU token. That was a way for us to basically try to build that. But we're the only ones doing it. For the time being. But to me, it's no different than when we started talking about Web3 gaming. A lot of people today probably forgot that when we started talking about Web3 gaming in 2017, 2018, and 2019, basically most of, in particular, the crypto community was not very optimistic about it, right? Because they didn't understand it, and they thought gaming was for kids, and they thought that nobody would do that. And of course, today everyone's talking about Web3 gaming. So again, I think of education the same way. Just like we did with gaming before, we're pretty patient, we'll keep building. And I think that moment will eventually come because, at the end, we have to sort of think, at least we like to think, what is our human construction, right? What are we looking to do in our life as humans? And I think, if you can solve these things and target them in any industry, whether it's Web3 or Web2, then I think you'll see opportunity. We love to play games. We learn through play. That's one of the reasons why gaming and generally games are sort of such a large industry. We need to learn. It's not just education. We're wired to be learning. That's our whole dopamine receptors are sort of trained towards motivating to making us learn. So again, these are mechanisms. I think the big social networks have hacked our learning systems, right? And I think, if you focus that in the Web3 manner, we can create these powerful incentives to basically rewire our learning brains for more optimistic outcomes and better outcomes for people.
An industry that has been doing that pretty well also, gamifying the industry, is health.
Yes.
And I see you have a Neuraring.
I do,
Why?
yes. Well, I think, health is a major industry as well. I mean, we've invested in companies like, OliveX, for instance, and so on. And they've launched things like the Dose token as ways to basically sort of improve people's sort of, awareness and sort of health data, for instance. To me, health is another form of wealth. Maybe it's the even more important form of wealth. Like when people talk about wealth, it's not just about money, right? It's about mental, it's about fitness, right? Because at the end of the day, if you make a bunch of money, what's the point? If you basically have to go around in a wheelchair, right? And so this is just another form of data, right? This data basically helps you generate information about who you are and how you live and how you can optimize that. And that data can be valuable to other people as well down the road. Like we believe in Web3 that we own our data, and therefore the derivative and network effects of this data can then be shared. This data that I'm generating today is only valuable to me. Eventually, this data will be valuable to others. I mean, imagine what would happen if medical health records were basically shared across the world in a zero-knowledge way. Then we would have a way in which we could analyze problems more deeply without having these silos of data where we have to seek permission. I mean, have you tried sharing your medical records from one doctor to the other? Good luck, right? Never mind cross-border or cross whatever, right? Yeah. Which means that every place has to start all over. And again, maybe people cite privacy laws and so on. And so again, I think that when it comes to blockchain and zero knowledge, this is a perfect way to do that.
When did you realize that health is wealth? Is it something you always understood, or did you have some personal struggle?
Oh, I definitely had a personal
mental
moment.
health and physical health.
Yeah.
To then say, now I need to do that and take this more seriously.
So most people don't probably know, but I used to be pretty fat. I had a waist that was 36, and this is what happens when I guess you have young kids, and I think the thing is when you are in when you're in your 20s, your natural metabolism of your body moves quite adaptive, so you feel you're invincible. But then when you turn in your 30s, your metabolism actually kind of drops, and you kind of forget about that, and you still eat and function like you think you are in your 20s. And then you have kids as well, and that ends up being your focus. And by my, I think it was late 30s or or close to 40, basically I had a spine issue. I remember very clearly I was in Scotland, and my I guess the weight of my belly, including the fact that the bed was really, really soft, because especially I don't know, in Europe, people just like really soft beds. I don't know why. And so I couldn't get out of bed because I basically just sank into it. And my L5 basically got pushed into my spine, and I was semi-paralyzed, or at least it felt like it, right? I couldn't walk, it was painful, and that was sort of the trigger point, right? And I think most people hopefully would take care of their health before they reach a trigger point, but that was a wake-up call. And then, and my wife obviously was super concerned, so she's like, okay, here's your exercise regime, let's do stuff. I went on keto. Basically, I went extreme to lose weight, and then basically try to maintain a certain lifestyle thereafter.
You're still on keto?
No. I lost too much weight on keto. And so I'm not on keto, but I don't need nearly as much carbs as I used to.
Interesting. What's your biggest prediction for next 12 months?
Biggest prediction for 12 months? I mean, first, I think the market to me is going to continue to accelerate in growth. I think, I had actually predicted earlier that Hong Kong would actually launch an Ethereum spot ETF. They already just did a few days ago, so that prediction's out in the sense that it already happened. But I also think many other countries are going to be basically launching Bitcoin spot ETF, which I think is going to be a bigger driver for value for Bitcoin than I think we're going to see with the halving, right? I think, to me, the halving is more like Christmas. It's something we can celebrate on, but I don't think it has as much of a material impact. It's like a tradition. So we can all remember that Bitcoin is still around and has a meaning. And of course, today it's of course super relevant. And I think Web3 gaming will continue to drive the narrative for this year, just because so many gaming projects are launching, and I think will bring in their own ways new communities into the space. My hope is that education will become more mainstream, but I think we need to give it a little bit more time before that develops, because narrative. And I think also, when you think about, like, we're, for instance, the largest validator in TON, right? So we think basically networks like, the new L1, L2s that are emerging are also creating really powerful new narratives for community growth. I think we should be expecting to see a ton of airdrops, which I think we're going to drive a ton of new adoption into the ecosystem, driving more value broadly across. So yes, I think 2024 is going to be a really powerful growth year for Web3, and hopefully will extend into 25.
Last cycle, we had the crypto lending and borrowing that basically enabled to create, every bubble is basically when you have a lot of leverage building up in the system, and at some point there is, an unwind of the leverage. what do you think is going to cause this cycle? What do
You
you
mean the
think is
unwinding?
what do you think is going to, I won't say mark the top, but that's kind of potentially dangerous for the industry. I mean, positive in the beginning, and then people get too kind of excited and
Yeah. So I think first, anytime you go through sort of cycles like these, there are lessons from the past, and the lessons of the past I think will be heeded. Meaning that I don't think we'll see another FTX. Knock on wood, right? I don't think. I think we've clarified the situation in Binance, which is great. I think we won't see another Terra Luna in its current format, right? I think we've got some interesting experiments that we see, like with Athena, for instance, that have variations of this, but still it's ETH backed, for instance, right? So I think we still have innovations from those periods and those cycles that will both push the industry forward, but will also set things back, because that is the nature of capitalism. So I think one of the things that people often don't appreciate is that capitalism is inherently volatile. If it wasn't volatile, then you wouldn't have progress. Capitalism is a proxy for change, right? Without it, you wouldn't have disruptive technologies like Tesla, green energy, or companies like Facebook, Google, or even blockchain, Bitcoin, crypto. All these things wouldn't have happened if capitalism and the capitalist incentive didn't happen. And so to me, therefore, volatility is a part of it. So rather than think about sort of when is that moment, I mean, we can predict and talk all day, but rather prepare yourself as a business or as an individual for inherent volatility as long as we live in a capitalist system, right? So which means you have to manage your risk, which is what we do all day, right? And if you happen to be too greedy, then really that means you haven't managed your risk that well, right? We just reported our financials, a few days ago, and we reported $100 million more cash than we had in the previous 1 year ago during the start of, I guess, that bear cycle, proving the fact that if you manage your asset base well, you can still make more money in a bear market, even though things are tough, right? So there are lessons there, but I think the key is that you have to learn to live with risk and volatility. I think the only constant, and it's a cliche, but it's true, the only constant is change. There isn't anything about that can be stable. And if you want to have a true stable economy, then you can go over to socialism and go for state-controlled systems that tell you how to live your life. And I think most people, given the choice, would actually choose freedom, which does come with some volatility. My pleasure. Thank you.